And we're live.
We are live. Ivan.
What's going on, Howard?
It's Momentum Monday. It is February. Can you spell February, Ivan, quickly?
Of course. February.
See, Ivan's fourth language is English, and he's smarter than most of the Americans that I hang out with. So, Ivan, I was watching Comedians in Cars Getting Coffee, the Gary Shandling episode, and it's just, I can't, pull up a quick pic of Gary Shandling.
I've seen his pics. There is no resemblance.
There's a picture just before he died. Honestly, like the old Gary Shandling. Just pull up a picture. Let the viewers decide.
Okay, so first I need to share my screen before I pull up a picture.
Better than looking at my face. Do it.
Yeah, so let's do a screen share. And then do this.
We'll get to the markets in a second. This is really important because
Gary
really
Shandling.
one of my favorite.
Here we go.
One of the greats. It's a spitting image.
Yeah, right.
Look at him.
So
there's no doubt you could be a Jewish comic.
Yeah, I could. Maybe the lips and the nose, but nothing else.
Wow, that's something. You look more like him than I do. Okay, so I win again. All right, let's get to the show. This is the S&P. And I'm going to give you his thoughts. My thoughts are, some interesting action the last few days. But, I mean, defense with the splash of offense. I've gone from full offensive mode, Ivan, to guilty until proven innocent. But I do like the fact that we've created a little nervousness in the market. I mean, you go from all-time highs to a correction of 10% in record time. It's a perfect Trump kind of market. Volatile, and no one seems to know what they're doing right now, and everybody's making mistakes. But I think I've quickly switched to defense. But that doesn't mean there aren't great ideas, which we're going to go through here. What's your take?
We spent more than a year.
Now, are people seeing the chart? I don't want them to see me. Are people seeing the chart?
People are seeing the chart. They should be only seeing my screen right now.
Okay, great.
So you can take off that orange shirt,
No, it's a nice sweater. I mean, it's not complimentary to my man boobs, but I mean, it is a great sweater. Okay, so let's just make sure they're seeing charts and not seeing me.
Yeah, so we spent more than a year where the biggest drawdown was like 2 to 3%. So people forgot what volatility, looks like. And I mean, there are many reasons behind this recent pullback, and we don't even know if it's over yet. The only thing that we know that, it's normal to have 10%, 15% pullback at least once every single year in the market. And that once there is a big spike in VIX, volatility tends to stay elevated for an extended period of time, for at least a few weeks to a few months. So I expect to see more back and forth in the next few weeks. So bigger daily ranges. So it just makes sense if you're trading actively to just cut your position size maybe in half. Just to be small and more nimble, because the market will be moving up and down a lot.
Yeah, I think that's okay. New positions, maybe trade half size. Now we'll get right into strength. I don't want to talk about. There's no use dwelling, and we're really only back to December prices, so it's like kind of comical that we've basically only wiped out a couple months of gains. But let's go look at some strength.
Yeah, I mean,
explain a hammer first of all, because those two charts, those two last few days here are hammer. Do you know can you explain a hammer?
Sure.
People are going to hear that word.
Every time when there is let's look at the bigger picture first. So every time there is a quick lower in the market, in the majority of cases, the market tend to retest that low. But when they retest it, as it did on Friday, if that retest happens with a momentum divergence, meaning that if your stock make new lows as the general market make new lows, that's usually a sign that the buyers are in charge. And this is exactly what we had on Friday noon. We had a huge momentum divergence, which emboldened many people to step up. And we went from there was a retest, new low, scared a lot of people out or stopped them out, people and algos. And then when people saw that momentum divergence, they stepped in and pushed the market higher.
And I would say as much as I can put my foot in my mouth all the time and saying defense until proven otherwise, and then you could talk about half positions. I think what the market could do here to just fool the most people is kind of like what Bitcoin did last year when it went from 4,000 to 2,000 and on the Jamie Dimon news. I mean, what the market could do to just freak everybody out and really send it is climb quickly back to all-time highs here. I don't think it's the same. I mean, we're talking about trillions of dollars versus billions of dollars. But other than nothing new about the political world has changed over the last year. We still the same lunatics in charge. The Democrats still don't know what they're doing, and earnings are great. So it wouldn't shock me to say
V-shaped recoveries are totally possible. I mean, the main difference between the market and the Bitcoin is float. I mean, Bitcoin is currently 18 million coins.
No, I'm just saying it's that type of market where it could just surprise the most people by just returning right back to all-time highs. And if we look at some of the strengths,
yes, I mean, absolutely. For example, Mercado Libre showed notable relative strength. Last week they held their 50-day.
This is eBay of Latin America. This is a combination of hedge funds wanting to have exposure to Latin America, and this is kind of the eBay, PayPal of Latin America. And so it's remained strong through this, stayed above its breakout level. It's strong.
Most of emerging markets is about commodities, so there are very few stocks that give you exposure to actually to the internet growth in Latin America. I mean, Meli is one of the main ones.
Where's Brazil? EWZ, so people can just see all of Brazil. Yeah, so definitely back into the chop, but but really only a 10% pullback. Let's spread that out longer.
Let's go to a weekly view.
Yeah, so you can see the World Cup crash. Again, I don't love Brazil, but I think it's you can see that Mercado Libre is really the strongest internet brand in Latin America, and you can see that Brazil is recovering from the World Cup.
From a big bear market. I mean, they had a 80%. It's not even a correction, a bear market.
Okay, let's go back to the U.S. Let's look at some winners. Let's go to what's working.
Okay, so interesting. There is an industry that is holding extremely well, and in IntelliChart they call it infrastructure software, which I'm not even sure what it means. But
I'll explain it, but let's show some examples.
All the stocks that belong to it are holding very well or making new highs. I know this one, Mimecast, OKTA showing strength today. They still need to report earnings. Which ones? QNST, incredible relative strength.
These are all in the same industry, Ivan?
Yes, US80, they even, try to break out.
Mm-hmm.
Which one?
These are smaller companies. Even Okta is only a $3 billion company.
All of them are very, small companies, small cap to mid cap. And just in this market, it's incredible that, they're holding relatively well.
Yeah, I was going to do, Okta's one that I've been looking at. If you pull that back up, so it's $3.5 billion company. Is that on the SL50?
Yes, it is.
Okay, so it's an interesting space. I'll explain quickly for people because I have been watching this a while. And our fund was an investor in a company called Bidium, which was just acquired by Google for a pretty big number last year on a smallish revenue base. And there's two dudes. Okta is in the single sign-on business, so it's part security, but mostly just about a service. As companies grow and have hundreds of employees and hundreds of software products that each company use, Okta builds software to help you control security around sign-ins. So if you fire somebody, the idea is, can we quickly, make sure they don't hack, all the different products that they use, and so Okta, if you're a hedge fund, want to have an investment in this space, there's really only two companies known, although Amazon's coming into this space, and this goes to one of the things that I love about the stock market. There's not hundreds of private companies that hedge funds and money managers can own. There's a $3.5 billion company, which is relatively tiny, and call it overvalued or what. If you're a hedge fund that wants exposure to this area of security and enterprise around single sign-on, this is the only game in town. And so this becomes a proxy, and you can see it holding up in this correction. This becomes a proxy. It's only been public a year or so, but it becomes a proxy for the whole industry. And so Bidium was acquired by Google. Google's really the only competitor to Okta, but Google's probably competing, as I talked to some smart enterprise friends, more around identity. Okta's really an enterprise company. They're just about selling a product to Fortune 500 companies and Fortune 100 companies at a high revenue amount. So this one interests me because there's very few ways to own this specific sector. And you can see that's the fact that it's holding up well. The catalyst may just be that they get acquired by a Salesforce or a Microsoft or even Amazon as they look to control this really important software space and security space. So that's one doing well, and it makes sense. Shopify. Are people seeing the chart, Ivan?
Yes, there should be only.
So one that we've been long since, I don't know, 20, but you can see, obviously, as the price goes up, the volatility increases, but you can see this, it's like, what correction? They had their own mini correction, I don't know, 6 months ago on a short sale report by Citron. It was mostly junk, and you can see how the stocks reacted. Basically, a very unknown Canadian company, and it's a fantastic, as we've talked about on for a year here, play on e-commerce. And today they announced, I think they may be selling weed products. Obviously, it's a Canadian company. I don't know if that's good or bad, but the market seems thrilled. The earnings are out this week. It's hard to find something bad about that, other than if you're just nervous about the market.
Yeah, I mean, if you're bullish on small businesses, I mean, Shopify is one of the companies to play that.
Its store with millions of companies or at least tens of thousands of companies are powering their e-commerce with Shopify. What is that on the SL50, Ivan?
Yes, it is. Okay, let me pull up the list real quick.
This is the SL50 list Ivan and I put together over the years. This really finds the strongest of the strong based on some proprietary quant and fundamental stuff that Ivan and I do. I generally, if I'm not long the stocks in this thing and the market's in a bull market, I'm making mistakes. You can see today I added ARRY, Ivan, but long Shop, long Zendesk.
Yeah, I'm not sure about much.
Twitter made the list. I'm long Twitter. It's interesting. What else is there? Some biotechs. Yeah, Mazor that I've been, ResMed sleep company. So there's some great companies. There's Amazon, there's Grubhub. So you can see there's just a lot of strength out there. Mostly tech, mostly biotech, mostly tech and biotech.
Yeah, there are quite a few biotechs that are actually holding very well.
And so there's a lot of new names on the list too.
Yeah, this one, Cure, it's a Dutch company. They broke out to new all-time highs today. So, yeah.
Don't worry. And this, people can subscribe. I think it's like $100 a month at marketwisdom.com. Ivan runs this. But you can see Zendesk now 16 weeks on the list, Ivan. We've been long this a long time. You got Mercado Libre, we got Shopify, New Relic, doesn't interest me. Fortinet, that's application software. There's some big companies on here. So it's software, biotech seems to be. Anything specifically you're looking at?
I mean, I'd say that, as I said, there's some interesting setups in biotech. For example, this one, not this one. Let me see, Arena. This one. So this one is holding incredibly well, and in a stronger market, it will break out. In a weaker market, it will fail.
Stretch that out a bit, Ivan.
Okay, let's go to weekly. This is a weekly, so I mean it's kind of coming into some potential resistance here.
It's had a good run. These things just implode on news sometimes, and you got to really understand what you own. Why I generally avoid recommending individual biotech stocks, but they are.
There's definitely more risk involved, and this one today, okay, not new all-time highs, but new 52-week highs, broke out from a decent base. It's highly shorted, so there's some.
No, again, technically and fundamentally, I just don't have the knowledge around biotech, so it's just. But it is interesting to see the risk still being on. So you have software and biotech, which are really what people are running in towards. This is an interesting company. This is a new IPO.
Yeah. It's back near all-time highs. It's showing relative strength. Definitely want to keep an eye on. It's been a good trading vehicle, in the past couple months, and I think it might be setting up again. But again, it depends on the overall market strength, because in more volatile markets, 80% of the move depends on the general market direction.
Mm-hmm.
So you have to be aware of that you can wake up on a 2% gap up or gap down, and you can be stopped. And this is why this environment is a little bit more challenging for swing traders, because stocks can easily gap below or above your stops. So
yeah,
it's harder.
Give people an example here. Lulu, which I'm long. Even looks great, but then the market just without the strong market, I don't see this being able to really take out those highs that it made a few days ago. So it's going to need some market strength, and even though we've had strength the last few days, it hasn't happened. I'll wrap it up with some interest rates. There's a lot of talk about interest rates. You and I don't really follow them or trade them, but the fact is rates are rising. It's off a small base, obviously. Rates have been so low for so long, but they really, considering the crash we had last week, in the past, rates have plummeted into those type of things, and right now the rates are, breaking out and out of long-term trends, again off low bases. But we're not used to rising interest rates, and I think I don't know if that's the tail wagging the dog and why the markets are correcting because of interest rates. So we just need to let more time go on. If you look at real estate, the one thing Trump is supposed to be protecting, if he cared about himself, we look at REITs and the real estate index and utilities. So real estate had a great run, and now it's just kind of chop soup and giving back a lot of.
Definitely one of the weakest sectors right now, and
since Trump's been really nothing through 2017 compared to the other indexes since the election, kind of been chop soup you know, and you would think that people would be really excited about real estate with this president, meaning that's all he knows how to do, and that industry's struggling. Now, that could just be interest rates. So it's just, you know, again, don't know if it's tail wagging the dog, but that is something that would slow down this economy tremendously, especially, you know, where I live in Phoenix, if rates continue to creep up. People are not used to paying 5% for their mortgages. It wasn't that long ago, it was 2 to 3%. So that's a huge, you know, with mortgages backing up into the 4% range, those, you know, on $1 million, it's real money every year. So, and $500,000, obviously, and any number that someone's borrowing on their first house, those numbers get bigger. So we'll leave it there, Ivan.
Okay.
Have a great week. Did I miss anything for you?
No, that's all. I think you were very extensive, and I agree on the interest rates in the real estate. But they're still low, but as they rise, it's just normal for prices to slow down at least a little bit.
Yeah. So we'll see if it's, you know, I think half positions are okay if you need to play, but it's okay.